So I'm sure by this point in your trading journey, you might have heard of fair value gaps and imbalances. But what are they and how do they differ from one another? And most importantly, which one should you be trading and which is going to bring you the best results? I'm going to break down the differences, which one I prefer, and how I trade it. So with that said, let's get to the learning. Okay, so let's first break down the differences between fair value gaps and imbalances. We're going to start with the fair value gap. Now, as you can see on the screen here, between the two, they're pretty much exactly the same. So the way they're marked is identical, and the way that we view them in a market is identical. So a fair value gap and an imbalance are both open price ranges, meaning when we have a large candle like this, which leaves wicks untested, that is an imbalance or a fair value gap. So for example, if the wick of this candle came down to retest the wick of this candle, this would not be an imbalance. But because it doesn't, it leaves this open price range, okay? Same on both. Now, the way that a fair value gap is traded is different to an imbalance, and this is where the interesting bit really comes in. So the concept with a fair value gap is once the market retraces into this area, we look for a buy within the fair value gap. So we look to take the market long once it retraces into the imbalance. Now, in the case of an imbalance, it's different. Instead of waiting for a pull in to buy, we are looking for the full imbalance to be filled. So what we'd be looking for in an imbalance is actually the entire open price range to be filled and the market to trade into the demand or supply areas below or above price. So in a buying example like this, we'd be waiting for the market to fill this open price range, trade into this demand, and then move long from there. Now, as you can see, we would view a fair value gap and an imbalance completely the same, completely in the same way. When we see them in a market, it is just whichever option or whichever approach you decide to take, which means sometimes a fair value gap will be traded into and the market will run away, which means the imbalance in these instances will not be filled and you won't be able to take the trade. But in other times, the fair value gap will be completely filled. So if you've bought somewhere at the top or the midpoint of the fair value gap, there's risk of being stopped out when the market comes below this region, or you may actually just have to have terrible risk reward in order to get the position. So there are benefits and drawbacks to both. Now, for me, myself, I trade imbalances. This is the more old school way to trade. Fair value gaps are a pretty new term as far as I'm aware. I saw people start to talk about them maybe about a year or a year and a half ago. And it's basically just an altered way to trade imbalances. Now, imbalances is a concept that's been around for a very long time. I've been trading this for absolutely years. This is the way that I prefer to trade it. So what we're going to do now is head over to the charts, and I will show you the reasons why I prefer to trade imbalances over fair value gaps. So I just want to start by saying there is no real right or wrong way to be trading. Whether you use FVGs or IMBs, both can be fine. But I'm going to show you the 3 reasons why I am not such a big fan of fair value gaps and why I prefer to focus on imbalances in my trading. So here we have a big open price range. To mark our FVG, fair value gap, we would connect the wicks of the previous candles. We may use these candles here. Alternatively, you could look at using these candles here. Now, the reason number 1 that I'm not such a big fan of fair value gaps is just the subjectivity. So I believe that because fair value gaps can arise in a lot of situations, and you can see these spaces happening between many different candles, like this one just here, they become a rather subjective concept to trade with. It means you can kind of choose where you mark your fair value gap. Are you going to use these wicks or are you going to use these wicks, for example? So because of the subjectivity, it just makes it a little bit awkward to stay consistent with compared to imbalances. Now, if I view this from an imbalance perspective, I have no concerns as to where I think the market's going to go. I am focused on the supply zone up here. So this open price range for me is not a matter of where can I sell inside of this area. It's just instead going to be a case of if this zone fills, I will then look for a short. So for me, focusing on imbalances, my setup would look like this versus a fair value gap trader would be looking for a short like this. Okay, so the subjectivity comes in here. Where exactly would we sell from? Now, there's obviously the option to sell at the entry into the fair value gap. But at that point, your stop loss is either going to have to be inside of a supply zone, which is very dangerous, and obviously is not going to give you the best risk reward anyway. Or, even worse, if you wanted to be safe, you'd have to clear the supply zone, which makes risk reward even worse. Now, things don't really improve too much when we use the midpoint of fair value gaps, as I see some people doing. So if I was to enter from the middle of this FVG, my stop loss is either still going to have to be in a danger zone, or it's still going to have to be very big. So when we're looking to sell from supply or demand zones instead of fair value gaps, we are actually looking for pretty significant retracements. So if we mark up the swing high to the swing low, you're going to see that generally supply and demand zones are going to be around the 70 to 80% retracement level, which means obviously if we're retracing 70 or 80% through a movement, the entries we get are going to give us better risk reward because we're entering higher up, our stop losses can be smaller, and therefore our targets can be larger. If instead we are entering from fair value gaps, we have a problem where our stop losses are going to have to be dangerous or simply too big to get meaningful risk reward out of them, even when we enter from the midpoints. So, reasons number 1 and 2 is just simply the risk reward is tricky to get right. In certain situations, fair value gaps won't allow you to get a good risk reward unless you wait for confirmational shifts on low timeframes within them. But even these, because the market's trading in an imbalance, can be very low probability. It's quite common that we'd see a reversal like this, but then the market will just continue up and trade towards supply anyway. So, yes, you can wait for confirmation inside fair value gaps, but the odds of that actually succeeding a lot of the time are still pretty slim. So the first two reasons are the subjectivity around fair value gaps and the poor risk reward potential that comes out of a lot of these. And the third reason is simply that the supply and demand zones at the extremes generally come in as the more optimal entries. And I do see the majority of the time, these fair value gap trades are completely filled anyway. So people will enter from the fair value gap, they will win the trade, and they will put that down to the fair value gap. But when you look at their charts, they actually did get a supply or demand retest, meaning they could have just traded supply and demand instead and used the imbalance for a complete fill. Even in this example here that we're looking at, if you take a look, this is exactly what I was talking about. So from fair value gap trading, if you entered at the low, you'd be in and you'd have ran down to here, but then your trade would have been stopped out. This also showed an internal break of structure, this price action here, which would have drawn you in to taking a confirmation entry, which then would have lost anyway. So if you went for confirmations here, or if you entered at the midpoint or at the low, you pretty much would have lost this trade or had to get into it with a considerably large stop loss in order to actually stay safe, which means the risk reward is going to suffer. Now you can see that although some FVG traders would put this trade down to success from the fair value gap, it did retest supply and it did fill the entire imbalance. So if you were to just enter on the fill of imbalance and use that supply and demand focus instead, well then you would have got a better entry and you still would have got into the position, no worries. So those are the three reasons I don't like fair value gaps. It's subjectivity, the poor risk reward potential, and the fact that I see the supply and demand zones and imbalances filled the majority of the time anyway. And don't get me wrong, there are some negatives to supply and demand that fair value gaps can beat. So for example, here we see that the fair value gap was filled, but this supply zone wasn't. So following the initial entry that we just looked at from this level here, if you were looking for an additional entry, you wouldn't have been able to get it with supply and demand yet, but you would have been able to get in with fair value gaps. So FVGs will definitely get you into more positions, but the positions it will get you into, in my personal experience and opinion, are going to be lower probability and lower risk reward. For me as a trader, I would prefer to take less trades, but take high probability, high reward trades like the one we got from up here. And because imbalance is so linear, when we see an open price range, we want it to be filled before we take action. It's very, very simple and mechanical to trade with in comparison to FVGs, where we can be looking at FVGs taking place everywhere. For example, even on the run up here, we could have seen there is a small FVG between this candle and this candle. So it's easy to actually get caught up thinking, well, the market's going up. Maybe we could buy from this FVG. Well, that's not going to work, okay? But when we look at things from an imbalance perspective, we can say this imbalance has now been filled. Now we want to go and tackle a lower down imbalance somewhere to the left. For example, this region here. It's very, very simple and mechanical to trade with imbalances. FVGs are fine too, and I am not slating them, but for me personally, imbalance is the way that I prefer to trade. So, how exactly do I trade imbalances then? That is the question we're going to lead into. Now, when I see an imbalance in the market, an open price range, I am always simply looking for this range to be filled. If the range is not filled and the market reacts like an FVG trade, I am not going to be getting into a position. Okay, I will just miss that opportunity and move on to the next. So I'm very mechanical with this, and once an imbalance is opened, I will be waiting for a fill of the imbalance to trade us towards some other area of supply or demand. Now, a demand zone is simply an indecision candle before a large upward move. You can see here we have this doji style candle with rejections either side. Then we have this large push. If we think about what this is showing us from a buying and selling perspective, this just here is showing us an area in the market where buyers were accumulating. And then buyers took off from this level, which means a large amount of buying took place inside of this zone. And inside of this zone is then seen as a discounted price to buy from. So the price ranges around 21.65 and 21.50 are seen as a good price to buy gold for. Okay, that's a good price for this asset, $2,165 per ounce. So because market participants have proven to us that they see this as a good level to buy from, indicated by the large push of bullish momentum that we saw, we can expect that if the market is to come back into this level again, more buys will be added. Because if it's a discounted price, why would you not rebuy when the market gets there? Okay. So the imbalance is therefore seen as just kind of a no man's land that is likely to be drawn through because there's not many orders situated in here. Most of the buying and selling that's taking place is happening below or above the imbalances, in this instance below, inside of this demand zone. So an FVG trader may look for a buy from inside of this zone. Me, personally, I'm going to be looking for a buy only when this zone has been filled. So if we allow the market to run through, you see we get a push down, we start to shift the structure to the upside, and then we lead in to further buys. Now, as well as using it to identify where the market is likely to be drawn into, we can use imbalances to identify where trades are going to be taken. So here we can see structural changes in the market. When we came down into this zone, we were forming lower lows and lower highs. The lower lows stopped here, the lower highs stopped here. We had this higher low, and then we shifted into a higher high at this level. When we pulled back, we formed another higher low, and then we pushed up and we formed another higher high. Now, from using imbalances, we could have actually found trading opportunity within this area. So as you can see, before this bearish candle formed, this large upward candle broke this internal structure range completely, and it left open an imbalance, right? The imbalance would have been from this very high down towards this demand zone. So the imbalance that we're now working with is going to be this range. Now, as you can see, following this, we had this large bearish candle, and then we had this bearish candle, which tapped into the demand zone below. The demand zone in question is once again this indecision candle before the large upward move. This range shows us that there is buying accumulating in this area. So our demand zone would be this zone here. And now that the imbalance is filled, we would be looking for a buy. So our entry would be on the demand zone, our stops would be below the previous low, and our targets could then continue on upwards to tackle new areas of liquidity or open imbalances. So because we're in an uptrend, we can use the highs for targets. Generally, what we could do is start using open imbalances for targets as well, but this market is trading at all-time highs, so we can't really go to the left and identify open imbalance. There isn't any, okay? So what we can do now is enter from demand once the imbalance has been filled, and allowing the market to play out, you will see that we get a nice rally to the upside. So in this instance, we see the power of imbalances. There was an imbalance left open between this demand here and this candle here. Once this imbalance was filled, we reacted from demand. We didn't react from the fair value gap. We reacted from a fill of the full imbalance. Once again, when the market started to take off and shift into new highs, it was the imbalances that were completely filled that allowed us to get into our positions. It wasn't a reaction from fair value gaps. It was literally a complete fill to trade into the demand zones that we were looking to buy from. Now, I want to reiterate the point that it doesn't matter which approach you trade. Trading is a game of probabilities, and you can win regardless of which approach you decide to take. So looking at some hypothetical results of two traders here, we have a trader trading imbalances and a trader trading fair value gaps. We can see that both traders could lose 50% of the time. So when the imbalance trader was right, the fair value gap trader lost. When the fair value gap trader was right, the imbalance trader lost. But over enough trades with the right risk-reward profiles, they're going to make exactly the same amount of money, even if they trade a conflicting approach. And this is the same with pretty much every system in trading. I don't like trend lines, support and resistance, and all of that stuff. But sometimes people trading those concepts are right, and I'm wrong. But it doesn't matter, because I can make my money, they can make theirs. That is exactly what you should approach IMB versus FVG with, and all you need to do is decide which one you prefer, which one seems the most simple and applicable to you, and then use that. So that's all for this video, guys. I hope you enjoyed it. If you did, check out this video next. And in the description, there is a link to a 7-part video course that I've created. Check that out. It's completely free, and I'm sure you'll enjoy it. So thanks for watching. Check that video out, and I'll see you in the next one.